think it's time to get this going. Good morning, good afternoon, good evening. Welcome to BitLab Academy daily streams. My name is Kelly Kellum. We are here every day, Monday through Friday. I almost said 10 days a week. Monday through Friday, 10:30 a.m. Eastern Standard Time. Really love having everybody here. We're building a wonderful community. Every one of these streams is geared to be watched at any time, whether it's today, January 19th, 2023, or at any point in the future. We will obviously use a lot of data that happens on the current day, but we go all over the charts. We look at different time frames, and we really try to bridge the gap from beginner to pro so we can really throw lifelines to everybody so you understand what's going on when you're on all these various live streams. Everybody give me a thumbs up in chat, give me an emoji, give me your favorite coin. If you can hear me, if you can see me, if everything's all good to go, just double checking all the audio levels, video levels, everything there. But we are going to be talking today about how do you we've all seen or we've had those friends, or we've seen other people online that have made so much money in a bull market. We just wonder how the heck that they're doing it. And we look at their portfolio. This is early on. We've all done this, and we try to sort of mimic their portfolio and start adding a bunch of the same coins that they have. But we're not realizing that we're in the middle of a bull run, and we're buying into a project that these people may have bought into very early on. And a lot of times in a fashion or in a timeline that was way before anybody else was aware of it, or very, essentially just what are those signals that they're doing to identify these different projects that they're getting into. And that's what today's stream is about, finding that next gem. And the gem doesn't just mean a coin that nobody's heard about or found yet, or the majority of people are holding. This is more focused on, it could be some coins that are in the top 20. It could be some coins that are 300 down the list, on the coin market cap or Masari.io or CoinGecko, whatever you're using to look at those coin rankings and identify different, just general sort of data about what's going on in the market. But there's a lot of data that's available to us on this. So before we dive into that, definitely, please, if this is your first time here, welcome. This is a community all about positive empowerment. There's not going to we make it a point not to have trolls in chat. If you do have something you want to share or critique, we welcome it. But be constructive with your critiques, whether it's of other people here in the chat or with me and myself and how you hate my face. I'm okay with it, because I'm here about sharing what's in my brain. I'm here about sharing the experience that I've had over the last 5-6 years in crypto, and also in trading for years before that, to really help guide you down your path so you can really prevent you from taking on some of the same losses I took on early on, and help prevent you from making those mistakes that I made. So please go ahead, hit that like bell, hit that subscribe, ding the bell. It really helps the YouTube algorithm, especially in these early days of this channel. We've only been streaming now, I think for basically 1 week and 1 day. Very early here. Everybody, you're in the crypto market. We feel like we've, you see other people that have had such success, and you feel like you've been left behind, but not on this channel. This channel is all about throwing you that lifeline and bringing you up to speed. And in the terms of being early, you're early in this channel. So let's grow together. Let's build a great community. So again, my name is Kelly Kellum. You can find me on Twitter at that handle right there, at Kelly Kellum, and the link is also below in the description. I believe somebody pointed out the link was wrong in the description, so I went and changed all of them on all the videos. Thank you for that. I always appreciate any feedback there. I've only got one pair of eyes, and I'm doing 3,000 things at once sometimes, so sometimes we got to remember to just balance our time, take a breath, and if you think your double checking's not working, maybe you need to learn to triple check. That's at least what I'm starting to realize about myself. So again, welcome everybody to the BitLab daily stream. Again, this is every day, 10:30 a.m. Eastern Standard Time. Please follow all these socials below here, and we will go ahead and get started. Again, welcome everybody to this channel. So let's go ahead and jump into the charts here, and we're going to start here just very quickly. I want to make sure everybody follows this correct Twitter profile for BitLab Academy. It's at Academy BitLab, nothing else, no spaces, no punctuation. You can also follow us on our Instagram at Academy BitLab. And then of course, make sure you go and check out bitlabacademy.com. We've got so many incredible things coming to this. You have no idea how hard we've worked over the last 6 months since I came in to Hit Network and BitBoy Crypto, basically taken over this entire brand, BitLab Academy, and I've they've trusted me with the vision I have to completely rebuild it from the ground up. We've got a ton of content in there currently, but as I said, we're rebuilding this from the ground up. We have over 25 new courses coming that will start rolling out here in Q1 all the way through the rest of the year. Over 200 new lessons broken down. We have a new studio we're doing it. We have new materials. We have new quizzes. We have new, everything. It's really a great community. We've also got a wonderful Discord, which you don't even have to be a member of BitLab Academy to be in that Discord. The link is below in the description. It is /BitBoy Lab, and you'll see that in the description below. Get in there, and if you are a part of BitLab Academy, then there's a much more robust sort of community in there that you have access to with tons of everything from charts to signals to trade setups to basically just community support and even support from our staff here and other really excellent traders. Also, make sure you sign up to this newsletter. I actually just sent out another newsletter today and really broke down a lot of stuff that I'm seeing in the charts on the 4-hour chart and the 1-hour chart, targets both to the upside and the downside. So sign up for this, and everybody that signs up for this, you're entered to win lifetime access to BitLab Academy courses, and we're drawing all those 5 different winners for lifetime access. That's a fairly large prize, and we're giving this away to 5 people. We're going to be announcing that on stream next week, January 23rd. And don't worry, if you're watching this later, we do things very regularly. So head bitlabacademy.com. This pop-up will still be there. It'll just be different information, different stuff we're giving away. So definitely sign up here and you get access to that newsletter and the different contests we're doing. And the markets are going up right now, everybody. And we're having a small pullback. We might even have a little bit more, but the markets are exciting again. Okay, this is what we've been waiting on for so long. We had such a sideways period. The tightest consolidation, it's the lowest volatility we've had in a long time. And this excitement just made me think, I thought it'd be nice to give back. So we posted this out in the newsletter. We are having a little bit of a limited access coupon code for everything in BitLab Academy, whether it be the courses or the BitLab Trading Suite, which are the incredible indicators that we've put together, which I'll be doing a bunch of content on here as well, intermixed with other free indicator content as well. I want everybody to have access to the data that we're sharing and also the tools. So I'm not just going to do paid tools. I'm going to be doing every different tool you can imagine. And I'm going to try actually to focus more on readily available free tools that everybody has access to. But those really great advanced trading indicators and the courses are 15% off right now. If you enter coupon code bullish15, you'll get 15% off your first month for the courses or for the indicators or both. So let's go ahead and jump on into what we're talking about today. And again, welcome everybody to the stream here at BitLab Academy. So also, this is my Twitter account. You can follow me. Make sure you're following. I only point this out because I want to make sure people, if you are following me, you follow the right account because there's so many imposters out there. And what's up to everybody in chat? I'm seeing a lot of really active chat for how small the channel is right now. I really appreciate that. Big love to everybody, wherever you're from. We got people from all over the world. I see Brad Guidell said bing bong. That's right. Bing bong, walla walla ding dong. Let's go. Let's get it. Let's get into this. So this is my Twitter profile at Kelly Kellum. I do a weekly podcast, which this afternoon I'll be doing another one, 2:30 p.m. Eastern Standard Time. I do it through Twitter Spaces, so follow me here. And as you can see, I share a lot of content here. But what we are talking about today, as I said, we're talking about finding that next gem. And why am I talking about that? And again, this doesn't matter if you are. My nose is itching. There must be something going on in the markets today. It doesn't matter where we're at in the market and where we're at on the timeline. Is again, if you're watching this today live, which we welcome you to be here any day live because we got a great chat here and a great community. And I am going to be trying to do also more engagement with the chat. Of course, I'm running this all by myself. You see me look at my keyboard sometimes. I'm having to trigger signals and scenes and all this kind of stuff to run basically this production of the show. But I'm going to try this first week or two, I'm really trying to get a good amount of content here on the channel that you can always refer to. If this is your first time or if you've been here several times, go to the BitLab Academy actual channel page and go to playlists, and I'm going to be separating out some different content. That right now there's quite a bit of stuff. It's very beginner friendly. There's a lot of advanced strategies in there, but don't let that dissuade you or discourage you, because my goal is with every one of these lessons, with every one of these streams, is to tie different concepts together, throw you a lifeline with definitions, explain what some of the basics are, so you can really understand what I'm talking about. The further we get along into this, I'm going to be doing, I don't want to say more advanced, but I'm not going to be doing as many definitions all the time. I still will try to do that, but you can always reference back to these early videos, because I break down charting, I break down TradingView. You can set up your template, set up, you know, how to set up what your basic trade strategies are, what the definitions are, you know, of different indicators, finding trade setups, you know, how to prevent yourself. Next Monday, I'm gonna be how to spot a trap, how to not get caught in a bull trap or a bear trap, and what that is. All these different things, very basic sort of concepts that even some pros or people that have been in the space for quite a while, they jumped ahead too far, too quick. And some of these basics, some people don't really understand at the fundamental level. And it's very important that you do, because it helps you understand how to utilize these different indicators along with your technical analysis, along with market signals and the context of what's happening on the broader market versus smaller time frames and market cycles. All this stuff is critical. And so I really try to break it down through all these early videos that I'm doing. But today, as I'm saying, we're talking about finding that next gem. And for what I mean by gem is that asset that you can have in your portfolio and I think you should always have Bitcoin in your portfolio, but that asset in your portfolio that's going to outperform Bitcoin. Bitcoin outperforms basically every other asset class in the world, in traditional markets. Okay. There's a lot of altcoins that, you know, we need to understand a couple key things in order to do this, and that's fundamental analysis. And within fundamental analysis, we have qualitative analysis and quantitative analysis, and that's understanding the quality, the utility, the team, all these sort of things that are, you can't break them down by a number. Okay. You're breaking them down by the quality that is intrinsic to this this said asset, whether it's a smaller altcoin, whether it's an NFT project, whatever it is. There's fundamental analysis is something that you should always do on any project before you jump into it. And then following fundamental analysis, then you can jump in and dive in with your technical analysis to essentially find your trade entries, exits, and what your strategy is to play those swings of price action throughout the various market cycles on the macro, the midterm, and the micro, because that's what I always say, remember, and I'm always going to throw back to this in almost every stream, and that is remembering this chart right here. This is critical for us to really understand what's going on in any market cycle, and to understand what you want to, how you can interact, what the action plan to interact is based on where you're at in your macro cycle, in your midterm cycle, and then your micro cycle. Okay. Now, getting back to what I was just talking about, what we're going to be doing is I'm going to show you some tools and some strategies to apply some very key sort of analysis, fundamental analysis, both qualitative and quantitative, so you can use the framework of projects like Ethereum and Bitcoin, and then also just traditional fundamental analysis strategies that we use on any asset class to basically see what is known as a bullish divergence. And we talk about this in technical analysis a lot, but it also is applied to fundamental analysis. And that is essentially a bullish divergence is essentially when you have data points that are signaling an increase in levels that are not corresponding to a decrease in price action. So if there is a decrease in price action, but there's an increase in volume, there's an increase in transactions, there's an increase in total value locked, which is on a DeFi protocol, decentralized finance protocols, like any of the smart contract layer one solutions like Ethereum, Avalanche, Cardano, all of these sort of layer one solutions, which are smart contract platforms, and they all have ecosystems built on top of them. So now, because Ethereum's already laid the road, it's already laid the train tracks, they've already proven what's possible within DeFi, and they have a massive ecosystem on top of them. There's new protocols, which are known as layer 2 protocols that are built on top of the layer 1 blockchain, in this case Ethereum, that have proven to be incredibly profitable assets that have developed on top of the layer 1 blockchain. Those could be things like Polygon, could be things like Curve or Compound or Maker or all these other DeFi solutions that are blockchains within themselves, but they operate on top of the railroad tracks that is Ethereum. Similarly, we have other DeFi protocols or layer 1 solutions, as I said, like Avalanche, Cardano. We can even let's go ahead and jump onto the screen here. And what we can do is we're going to come over here to Masari, and we're going to go to data. Yeah. Okay. Now what we can see here, and this is an incredibly useful tool, and I want you to do this as often as possible. Come and check, it doesn't matter if it's CoinMarketCap or CoinGecko. In this case, I like Masari, especially for beginners, because you can see here on the right, you can see what sector it is in. So if we're talking about DeFi protocols and trying to find spotting a gem in DeFi, based on the framework that Ethereum has laid out, we can see very quickly, how do we find other protocols if we don't know, that are also layer 1 solutions, that are also built on, that are smart contract platforms. We see this right here, which is ranked on this left, 1 through, whatever the total is. This has 1,400 assets listed. There's more, like about 25 or 26,000 cryptos, but this shows you right here, Masari is a very, very prominent crypto data company service. And this is a free part of their service to look at this, but they're only really classifying 1,400 assets out of 26,000. So what does that tell you about how fast the crypto ecosystem has expanded? It means that we need to do our diligence and not just buy something because it launches. Don't buy something because somebody contacted you or somebody told you this is the next coin, you should get it pre-sale. You want to know why? I'll show you why. Because if you come over here to TradingView, let's do. It doesn't really matter what it is. Let's do a newer coin, like let's say Trader Joe. I don't know what the symbol is for Trader Joe. I think it's just Joe. And I'm not saying this is necessarily a bad project. That's not what I'm saying whatsoever, but I just want to show something. And I'm just guessing. I have not pulled up this chart before, but we're going to go to weekly and look at this. If you got in pre-sale or the day it launched, because you're going to get those huge gains, look at what this asset class has done. Boom, straight down. Now, I'm not saying that this is because the project was rugged. That's not what happens. What happens is when a coin is released, there is a ton of of coins, of tokens that are within this this asset that were sold in pre-sale to early investors. Okay. And then a lot of people buy in on day of. If we actually even go down to the daily, can we do that? I don't know if it goes all the way back. Okay, I'm going to turn off market intelligence, this BitLab indicator we have. But essentially what happens is you have a lot of people that as soon as it goes live, when you have somebody buying into a pre-sale, they're getting the coin at a discount of what the projected launch price is of that asset. So then what happens is on the launch day of that asset, they're immediately in profit. So you need to understand what the release schedule is in terms of what that means is the early investors, the early adopters, it's sort of grown now and maturing. And if you're not seeing this at an asset in pre-sale, it's actually kind of a unprofessional sort of sense, or the business ethics are kind of lacking there if they don't have a lockout period. Because what happens is if people buy in pre-sale, they're buying it at a discount, and then the day the asset goes on the market, then they can sell immediately if there's no fixed release schedule, because they're already at a profit, and then they don't have to worry about this downtrend. They can wait till this downtrend peters out and basically find support like this, and then they can buy back in with more money than they invested because they already got profit, and now they can buy back in lower, and if they even choose to get back in this asset. So I really want to recommend against your idea of finding a gem is buying a project just because it launched. It's launching today, and you have the inside scoop. That's not the way to do it. what you want to do, and what I recommend, and this is not financial advice, but this is just from experience I've seen over years, is you want to find assets. You want to find assets that have been around, especially right now. This is a great proving mechanism. And this is why one of the things people that are experienced within the market, in a way, enjoy bear markets. And it sucks to hear, but somebody that's worth their salt in investing chomps at the bit for bear markets. Because if you understand the market, you're getting yourself into and out of position for the most part, in profitable sort of means consistently. And in addition to that, if the market goes into a bear market, what happens is it's a very cleansing function within markets when you have a bear market, because the assets and the projects and the companies, if you're talking about the stock market and traditional assets, it cleanses out the bad actors in the space. It cleanses out the people. For instance, a great example of this early, all of 2022 really was cascading liquidations the entire year. And it was basically showing, as Warren Buffett says, you don't see who's swimming naked until the tide goes out. And what that means is you don't see who people who don't have good risk management. You don't see institutions more predominantly who don't have good risk management, who don't have good capital allocation, don't have good diversification within their portfolios, don't have diversification within which type of assets and where they're allocating their capital, whether it be all in investments or in research and development or in actual safe havens like not only Bitcoin, but Bitcoin, traditional assets, and more traditional assets, like whether it be gold or bonds and these things. Especially if you're an institution, these are more important. And depending on your age and depending on what sort of risk tolerance you have and where you're at in your life with what type of capital you have, then this will determine what sort of risk exposure you can take in the market. So I'm not saying if you're 22, you need to be broadly exposed to gold and bonds and all this kind of stuff. You can afford to be more exposed to risk. If you're in, this is not ageism or anything like that, but this is just a comment on, traditional mind about healthy risk management and asset allocation based on your time horizon. And if you're 70, your time horizon in capital investing in crypto is much shorter than it is with somebody that is 22 and is basically investing, $100 a week from their job working at the theme park. So there's different risk that you can take on, and based on that risk, you want to diversify your portfolio differently. But we're going to have an entire stream on that later. Today, as I said, we're talking about these gems, but the reason I'm framing it this way is because even when we're talking about finding these gems, you don't want to lose humility. You want to always want to balance good humility and remove your arrogance and ego from investing, and greed, most importantly, and have good diversification within your portfolio. Even if you're a 100% all in crypto, I still preach diversification. And if you're in only crypto, then that means I always get the hiccups when we start our stream. This gets exciting. I just have so much to talk about within the hour that I just run. And I do want to shout out, if I am talking too quickly, you can slow down the stream down below. You can go on the settings and just slow it to 0.75 or 0.5. And it's perfectly fine. You can also press the CC button. I do have this set for closed captioning, I believe. So it should auto populate the words I'm saying so you can read them. Just two things to shout out there. But if you're only in crypto and all in crypto, and I'm all in crypto, but I believe in crypto in a way that I just can't express. And that has to do with my risk exposure. That has to do with my risk tolerance and my time horizon, and also my experience and knowledge within the crypto industry about crypto assets and trading and all these things. But I'm still very diversified between different assets within the ecosystem, between Bitcoin. I'm not going to say all the ones I particularly have, but I have a basket of Bitcoin and Ethereum and Cardano and Atom and Compound and Gala and Sandbox. And so what that means is I'm diversified amongst different assets within the crypto ecosystem, but I'm also trying to touch on this exact point. It's all leading up to this. Is you come into Masari.io. Again, this is a free service This is not a paid thing. This is free. There's a paid service that's on here, but I'm pointing out the free tools that you can utilize with this. And you get the coin market cap sort of ranking based on the market cap, which again means the size of that asset class, how much money and how much liquidity is within each asset. And the smaller it gets, this is ranked from top to bottom. For instance, Coca-Cola is a bigger company than the corner bookstore. Why? Because there's a lot more capital within the Coca-Cola organization than the corner bookstore, right? So the corner bookstore in this instance would probably be, ranked number, 5,000 or something, you know what I mean? Because it'd be so much smaller than the Coca-Cola corporation. Same thing with these asset classes. And the higher a coin is or an asset is on this ranking, I don't want to say the safer it is, but the more established that project is, the more liquidity is in that asset, but also likely, I'm not saying this is exact, but likely, the less likely, there's less risk in it, and there's still going to be risk, because I do want to point out Luna, part of Terra Luna was in the top 10 when it collapsed, which is why we had that huge sort of cascading liquidations in the early second quarter of 2022. So just because something is up here doesn't mean that it can't have an issue. This is still a very early industry, and we're still in the proving grounds of a lot of stuff that's happening. And that also has to go back to what I was saying. You don't know swimming naked until the tide goes out. And when we have this downturn in the market, and you start having insolvencies, meaning there's not enough money on the books to balance the liabilities that a company has, then you have these insolvencies and bankruptcies, and also just liquidations of projects. And then that spills over to other assets. And so in this case, it still rings true. The higher the market cap, the higher something is on here, the lower the risk. But also, that also means the lower the risk, likely the lower the returns you will get. So we want to find these assets that are going to outperform Bitcoin, because I want to tell you right now, even if you're investing only in crypto, my goal is, I want to see the dollar value go up, because I do have to take profits into my cash account to live. You have to take profits to be profitable in trading. It's not just about having it in an account, seeing a number. I'm not saying you shouldn't hodl. Absolutely you should. But over the period of time, you need to strategize and find ways that you could take advantage of major market cycles, that you can take some profits off, that you can then reallocate back into the market when you have lower prices. And that's what we're trading. That's what we're trying to bring to you in BitLab Academy. We go into a lot of detail on all this, but I'm trying to bring you all the useful nuggets, all the free tools and strategies on a more basic level here on these streams. So we want to find these assets that outperform Bitcoin. And so what we're doing is, we could see on the right-hand side, we can see these different sectors. And if we're trying to mimic some of the things that happen within Ethereum, then we can go to over here to DeFi Llama, which I talked about on the free tools video, tools every trader needs. I'll throw at the end screen here after this stream is done, a link to that. But you can also go to the live playlist on this BitLab Academy YouTube channel, and you can watch that video. But I break down this tool right here, DeFiLlama.com. Incredible tool. So what we can do is we can come up here to DeFi, come to chains. We can see all this. Yeah. Okay. And you can see, look at the dominance Ethereum has over all other DeFi projects. And this is the dominance in terms of total value locked, meaning how much assets in this case, it's US dollar value, is locked on chain in different various smart contracts, different utility, different functions on not only Ethereum, but then every protocol that's built on top of Ethereum. And so in this case, we can see, let's click, scroll down here. We can click on this asset, click on Ethereum. And now we can see look at all of these assets that are built on top of Ethereum. This is why Ethereum is so big. There's so much built on top of Ethereum. And then this ranks it, instead of market cap, a sort of similar way to gauge market cap within DeFi is the TVL. That's what this acronym stands for if you ever see it in streams. TVL is the total value locked. As I just mentioned, how much liquidity is locked in smart contracts and in utility and in function on these various different coins that are on top of it. Now we've seen that Lido has exploded recently. We also have MakerDAO, Curve, Convex, Aave, Uniswap, Instadap. Okay. Now, what I want to do now is we could sort of click through these various coins. Let's go to Lido and just see what's going on here, and we can see, just like we do with technical analysis on charts, with when we're looking at price analysis and we're trying to come here and find a trend line and try and say, where are we breaking out, where's the support, and all these sorts of things. We very similarly, in a slightly different way, but very similarly, we can look at this chart and we can see that we've had some large push-ups, massive drop right here. And this was in May 17th, 2022. This was right about the time of, I think this is right. This date, I think, is Celsius collapse 2022. Sorry, this is the daily. I'm thinking about 2021. This was, I don't even know what this was. This was a depegging. This was a drop 2020, May 20. Yeah, this was a Celsius collapse. I was thinking that we were in 2022 still. Man, we're in the future already in 2023. I forget we're 2023. So this was a Celsius collapse. We've had a long road since then, but let's go to. Can we go to, okay, here we are. So this is a Celsius collapse. We can see previous all-time high on the TVL was somewhere around 20 billion, and we are currently at 7 billion. And we can also look at all the information. Now this is quantitative analysis. This is part of the quantitative technical analysis, looking at this stuff, because we can count it. We can measure it by number. Now we can come down to, we can scroll down and we can look at various different information here. We can also really look at what's going on with the tokens. We can see basically different ways each project is integrated within the ecosystem, the crypto ecosystem. Now we can also zoom in and out here, and we can see a little bit of on-chain data for each one of these projects. And we can see, obviously, this is February, huge sort of inflow leading in. That was at the bull market, that huge push up that we had right here. So this is, so this is February right here. So leading into this, we're having huge inflows, as we can see, right? Zooming, I don't want to zoom in there. There we go. And then we can also see, this is US dollars, this is tokens. Zoom down a little bit more. Now, this is what's interesting down here. Now we can look at the daily, but let's just go to the weekly. Either or is fine. And we could see fees and revenue. Now this is interesting, because now we can start to see that even through right here in February, in the May, we did have a drop off. We had a drop off from May into June when we had the massive bear market. But as we see, look at this whole bear market. The fees and revenue is going up. The revenue is kind of going up and about here, but the fees are going up, which is indicating to me there's a lot of use case on this protocol, on this layer 2, layer 3 solution for on Lido, which is built on top of Ethereum. So this is indicating to me, look at this bullish divergence. And the reason I don't need to see the Bitcoin price, I know, because I look at the charts on a daily basis, that we're having increase in transactions and usage of Lido throughout the bear market of 2022. This is this is indicating to me that this is something to watch, even though we've had this huge drawdown in TVL. We haven't even looked at the price yet. This is a massive drawdown, but look at this, stable through all of 2022 despite a massive drawdown. So the TVL, once it fell off a cliff, it found a foundation, fundamental support to build off of. Now we can come over here onto the chart, and let's come over here. Let's go to Lido, Lido, and let's look at Coinbase, because this doesn't have a ton of data, but look at this. Through all of January, we've had a massive pump. We're going to look at a different chart here in a second, And again, if you want to pull up this measuring tool, you can click on the chart. You have to make sure you're not selected on any indicator or any other tool here, but make sure you're on your crosshairs or pointer or whatever. Click on the chart, press shift, put your crosshairs here right about the bottom, and then drag up and holding shift while you do that. And we've already pushed up 175%. Well, just looking at the DeFi Llama bullish divergences on this foundation that didn't continue dropping through the bear market, and then also this transaction fees and fees by chain, we can see that there's been a bullish divergence into all of October. Look at this, July. Basically, June through November, we had a bullish divergence. And then in January, we have this massive sort of spike. But the point being is we didn't continue falling. The developers didn't continue, didn't basically start leaving the project. There's, there's bullish fundamental data. And we didn't even look at the technical analysis on this. We looked at the fundamental data only, the fundamental sort of technical analysis, looking at DeFi Llama to identify, man, I have the hiccups, to identify what was going on here. Now let's look at another Lido chart. Let's go to, let's go to KuCoin. Okay, this is a longer chart. So now that we're trying to identify, is this sort of gem? And I've never looked at this project. I'm literally doing this live with you. I went to DeFi Llama. I noticed this chain, and we're using it as an example. So now we can identify what's going on here. So we had this, we're going to do basic TA here. Going to do option on Mac or alt on computer, PC, and do option or alt J. And we're basically marking out the high. We're going to mark out this low here because we're going to draw a fib. Just going to do it from right there. Now we're going to mark out this interaction right here, and look at that. Look at where this price action pulled back. I'm guessing this is probably about this the 786 fib, which means 78.6% retracement. I'm not sure yet. Let's do option or alt F. Draw this down, but that's actually right at the golden pocket. That's actually what I meant. I was just talking about the 786 fib in another video. So we're right here at the golden pocket, which is also previous price action right here. But we're having this massive drawdown here from August 2022 all the way until basically bottomed December 2022. Let's go back to DeFi Llama. Let's go back up to TVL. August 2022. This is all flat here for TVL, was going flat while price was dropping this entire time. Now we come back to the fees, and we could see, let's go to August. So price was dropping basically from August onward, July really onward. And as price was dropping, we're having an increase in fees. And why do you get more fees? You get more fees and you're making more revenue because there's a lot more use case on the protocol, which means that if there's a lot more people using it, then that means that there's obviously a utility and use case there. There's a function of support that's a belief of positive sentiment around that chain that is happening during a decrease in price action. So you're having an increase in usage while there's a decrease in speculative value. And we have to always remember, to separate the differences between speculative value and actually intrinsic value of a project. What we really want to do when we're identifying what that next crypto gem is, what that next asset is, when we're trying to identify, should I invest in this or not? We should not be asking that question when the price is, above all-time highs of previous cycles. That's when we're looking for exits of our price. That's when we're looking to take profits on our longer-term trades and in some of our shorter-term trades, so that then we can take advantage of the down cycle, the bear market, to then see what happens. There's also shorting strategies, but in this case, let's just pretend we're trading spot and we're selling at the top and trying to be very conservative and only buying once the price goes down to certain levels and certain targets. So the price goes all the way down. So now how do we identify our entries, and how do I identify not only Bitcoin, but Ethereum, Cardano, BNB, Avalanche, Atom, Filecoin, Arweave, all these different sort of assets, and then further down the list as well. But starting with the core assets in our portfolio, how do I identify when to enter on those trades? It's the same thing. It's the same strategy for identifying crypto gems. It's looking for utility and transaction stability or increases during the sort of downturn of price action. And if you don't have increase in transaction, then there's other data points that you can look at as well. It can be development on chain using things like GitHub, seeing that there's huge amount of developments, also decentralization of projects and these sorts of things. And all this stuff really, all these tools can be used on Bitcoin itself, and they need to be used more excessively, not more excessively. They need to be used more specifically when the smaller the chain you're going, the more strength and fundamentals you want to see to make sure the team is right. What their partnerships are is huge. So let's kind of look into that a little bit. Let's go back onto screen. We can come over here. We're going to go back to DeFi. Actually, we'll continue using this as a use case, just because we've already broken down some of the other things. Let's go back to chains, back to Ethereum. Then we're going to come down to Lido. Now we're going to visit website. Now what we're doing here is we're doing qualitative and quantitative analysis. And as much as I'm in crypto, and I'm doing this 100+ hours a week, I've been hearing the Lido name around for the last 6 months quite a bit from other people in the space. But there's only so much time you can focus, and I want you all to be aware of that. You can't be aware of every asset out there. I am in this space all the time, talking about these as much stuff as I can, researching it, but I can't be an expert on every single project. So in this case, I'm learning about a project with you, and we can sort of determine what it's saying about what's going on. And this same strategy, it doesn't matter if you could care less about Lido. What we're learning here is the strategy about how to identify if this is something that might be a good asset to look into to start to allocate some of our diversification towards, so we could be prepared for the next bull cycle. Because as I said, we're not buying at the tops. We don't want to buy here. We want to buy here. It's anywhere in this region here. Okay. And if you can't buy here, that's okay. It's absolutely okay. What you want to do, because a lot of times all of us miss moves. What you do is you identify those bullish fundamentals, you identify those bullish technicals, and then if you miss this move, one of the things that it does teach you, it does show you, look at this basic trend line right here. Okay. We had a downward trend line of resistance right here from $3, roughly $3, all the way down to 87 cents, 86 cents. And now we've already pushed up to $2.30. But if we're doing that at this stage in the bear market, which I'm hoping, and I'm thinking with my own thesis and a lot of other traders I talk to as well, think we're somewhere. Some people debate we're still here, we could have another drop. Some people think we're here trying to confirm the breakout. But either way, you cut it. I do think we're in this accumulation zone, and that's the same thing. What do I always say? The 3-cycle strategy. We want to look at the macro, the midterm, and the micro. And the micro can be, anything from the day down. You look at the daily, you look at the 4 hour, you look at the 1 hour, and then you can get really small into the 30 minute, 24 minute, whatever. But you want to look at least 3 time frames for any sort of investment or trade opportunity that you're investigating. So in this case, on the macro, we can go to the weekly, but there's not a lot of data here. This is the downtrend. So now we go to the daily. We just broke that down. We have our fib. from the top to the bottom, which gives us our likely retrace. Now, if we are thinking the bull market for Bitcoin is brewing, whether we've just started it or it's just around the corner, we are building the case for that. And so we also want to take into consideration the fact that money moves in cycles through markets. So and the problem with this is previous cycles, Litecoin kind of led a little bit, but Bitcoin runs and then Bitcoin pulls back, and a bunch of money, as people take profits out of Bitcoin, they take those profits out of Bitcoin and put them into altcoins. And then you get a massive altcoin season and it pushes, and then the alts sort of pause as a whole, start to pull back. And then a lot of the money starts moving back into Bitcoin. So it's kind of zigzagging with back and forth. But the problem with this is not a proven sort of theory yet, because we haven't had a huge amount of data to prove this is going to be a consistent thing within the crypto market, because we've only had one true, some would argue two, I would say 1.5 sort of cycles with a massive sort of developed ecosystem within the altcoin market as it relates to the how it works in conjunction with, in correlation with the Bitcoin market. So what we want to watch out for right here is that this isn't just a pump that was, some sort of manipulated pump, because when you look at something like this, if we come over here to, let's go to Masari, Lido, we could see what, I thought I gave a number there. Let's go to CoinMarketCap. Now we can go to Lido. I can't spell. So this is how, you see how I'm going between different tools, and I'm using different sets of data, and I'm trying to gather data that either is in confluence or in contradiction of each other. And I'm trying to see which way the scales balance there. Is there more confluence towards the bullish divergences on the fundamentals, the TVL going up, the fees and transaction usage, and the adoption rate? We can look at all this sort of stuff, and if all these things are going up while price action is going down, that's signaling that if in the bear market the asset is, I don't want to say being proven, but that utility is proving the value of that asset, of that particular asset, then you're seeing that if this is how it's performing on the fundamental side of things, the fundamental technical data of stuff, and I'm not talking about the speculative value, we're talking about the fundamental technical data, all the stuff we're seeing on DeFi Llama, the stuff we're seeing on TVL, all these sorts of things, and price action's falling, then that gives you a good idea of what's going to happen when the price action starts to go up, when other people start to see this, because the smart investors look at and gather all this data and put it together. That's what you need to do to make great money and great profits in crypto, in any sort of investing. It's not looking at the price action on a chart and saying, oh, it's here. Oh my God, it's going down. Oh, you know what? Maybe it could go up to here. That's all wishy-washy. That's hopes and dreams. Who gives a care about that? The market does not give a crap about you. If you want to make money in crypto, you need to set aside some time and set, whether it's 1 day a week or 1 hour a day or 1 day a month, it doesn't matter. The more time you put into this, the more progress you're going to see in your portfolio and the more profits you're going to see over time, because you're looking at the data that other people are not seeing. I'm going to say that one more time. If you want to make it in the crypto industry, in the crypto ecosystem, and make large profits and be profitable consistently over time, you have to remember that the market does not care about you. Other traders don't care about you. This ecosystem is a dog-eat-dog world. It's a battlefield that you have to battle through, and you battle profitably through this ecosystem by collecting data, whether it's 1 hour a month, 1 hour a week, or 1 hour a day. The more time you put into this, the more data you collect, and you start to see those bullish divergences on fundamental technical data, use cases, transactions, volume, total value locked, All these fundamental data metrics can show you if that stuff is holding firm or increasing during a downtrend or bearish price action, then you know that this asset is going to do well or has a higher likelihood of doing well in the bull market. That is the real gem here. That's what we want to look for. We don't want to just look at charts. Charts are great for finding the signal to enter or exit a trade. The data is what gives us the signal to start looking at an asset because an opportunity is coming up. So what you want to do is take all this data that we're gathering. We want to take all this data and then look at what's going on the chart. And then we have to think about things in correlation with each other, in correlation with markets. So the more detailed you want to get, the more time it's going to take. But the more time you take, the more profitable you'll be. Does that make sense? I hope everybody's following along here in chat. I'm really trying to share. This is obviously a bit more alpha today, but this is something I wish I knew when I was a trader, when I was an investor early on with my measly $100 a week. But that's where we start. That's where we all start. Think about Warren Buffett. Warren Buffett did not start out as a 100 millionaire to become a multi-billionaire. He's I think he's somewhere in the 100+ billion range. No, he started out as a very humble investor making small trades with long-term time horizons in assets and in people and in companies that he believed in. And that's a key factor because if you believe in something and you're interested in it, it's a lot easier to spend the time to investigate the data on it and to read the information on it and to check into different live streams and to go into DeFi Llama and Masari and technical analysis on stream. On the different free tools that I've shared. It's way easier to investigate and stay a part of and keep aware of what's happening in the assets that you're aware of. But I'm just going to pause there for a second. We're coming up. We got about 10 minutes left. I'm just going to pause and say what's up to everybody in chat. How's everybody doing? Is there anything, this is, as I said, these streams, I'm really trying to make sure they're tailored towards giving you all information that you can use. Comment in the stream there if you've learned anything from any of the streams you've tuned into so far. I also would really like to make this interactive, so post in there. Put hashtag sticking point stuff that you'd like to learn about, stuff that you'd really like me to focus on. I'm going to be going through all these messages, and I'm really going to be focusing, whether you're watching this live or in the future, you can comment below the video. And our team goes through these, and we want to tailor the information and the content to you so that we're teaching you stuff that you want to know, and we're also breaking it down in ways you understand. So let me know if you're understanding, if I'm breaking things down, or if I'm just rambling to myself, talking at my camera, because I feel like I'm here with you all, and I hope you don't feel like I'm just lecturing you. There's just so much I want to share with you. So I'm really trying to make sure that I'm getting all that data to you. And again, thank you all for tuning in. We're still going to be going here for a little bit. Please subscribe, ting that bell. Every time you all like the streams, as stupid as it sounds, it really is just a great way of saying thank you. It gives engagement metrics to YouTube, and they help support that. YouTube then says, oh, people like this, and then they start sharing it with more people. So it really helps us stay afloat because this is free content that we're trying to share from our hearts to your profits. So really, thank you for that. So I see there was a question in here I saw. Can you? Yes, this is actually a good one because it does tie into finding a gem, and fibs tie into everything. So we're going to talk about Fibonacci retracements and Fibonacci expansions here real quick to wrap out this stream. So let's jump back into the charts. Well, actually, I'm going to come back for just a second. First off, what Fibonacci is it's actually named after, and it shouldn't be, it's named after a famous mathematician from, I don't even know, 1700s, long time ago. But it was a math system that was actually way predates him, that goes back to around 200 BC, found in India, if I'm not mistaken. You can correct me if I am mistaken, but it's an ancient form of basically math principle that was noticed in the governing laws of nature. Some people think it might be the mathematical sort of sequence of all things in the universe. If you take a topographical photograph of a forest, the way that the forest without human intervention is organized by the patterns of how far trees are apart. Sometimes they're closer, but you will notice that there's a fairly exact sort of breakdown and ratio of distances of trees and a variety of closeness and distance. And same thing with the tree branch. You'll notice that there's with the tree branch, there's a mathematical equation to how the new tree branches arms come off those branches. When you look at a flower, how perfect the flower petals are. When you look at a nautilus shell, all of this is governed by the Fibonacci sequence. I'm not going to go into what that sequence is. There's a whole course lessons on it in the BitLab Academy. And if you haven't yet, go check out bitlabacademy.com. We got great, really detailed lessons in there, and also a great community there on Discord. So, and that's bitlabacademy.com. You can see all the info, boom, right there on the bottom of the screen. But looking at what the Fibonacci sequence is, if you think about how it governs all things in nature, it's really freaking remarkable when you look at a chart and you see what I did was I drew what over here on the left-hand toolbar. And if you don't see this on your second one, right here, second one down, click this little arrow and then come down and find the fib retracement. That's what we're looking for. Select it. Before you select it, you can also put a star on it. And if it's the only one starred, it'll stay showing up here, but also down here on the star on the bottom left corner of your screen. You can't see it because my window is in front of it, my camera. But it'll bring up this bar so you don't have to go all over to the left. But again, in addition to that, you can press Option or Alt F, depending on if you're Mac or keyboard, Mac or PC. And on any asset, and I'm going to actually go back to Bitcoin because this is remarkable. If you watch this, fib extensions and fib retracements are remarkable because they show you where very statistically likely, very probable price action is going to be. So if we're talking about just how interactive is it, we can see if we draw from this top right here, Option F or Alt F, and pull this down to this low from the top, this high to the low. And what we're focused on is this pocket right here. See how these two lines are close together? That's known as a golden pocket. That is what's known as the golden ratio. It's a ratio that makes the nautilus shell always, every time it creates a smaller shell and it gets bigger, they're perfect measurement of the 61.8% apart. That's this golden pocket. And this is what happens on, I'm talking like over 80% regularity. If you pull down, likelihood is we're going to have a bounce up at some point that's going to have interaction there. Will likely get rejected and get pushed back. It's not 100%, but it's very likely. Let's look right here at this top. Option F, top to bottom. Let's go ahead and zoom in on this. This was the top. This was the bottom. Look at this interaction, rejection. So we can understand now when we go to Lido, let's go back to our smaller coin. Let's go to another altcoin. Let's go to Compound. Okay. This one got destroyed by the Celsius collapse because DeFi lending protocols got destroyed because of the lack of faith in DeFi and all this sort of stuff, because it's this notion of putting your keys in somebody else's hands. And there are other ways to do it. We'll talk about that in another stream, but we look at this right here. Let's look at all these small retracements. First, let's do this right here. Let's zoom in. This one never made it back to its retracement here. But let's continue from this top. So what we're going to be looking for in this asset, we're talking about gems, just on our Fibonacci retracement there. We're also going to we can do smaller time frame Fibonacci retracements too, because what do? The macro, the midterm, and the micro. So now we're going to do some more midterm stuff. I'm going to do Option F, delete. Option F. We're going to get some different levels of likely price action to where what we're looking at primarily here is these golden pockets. It's getting quite muddy there. But what we're looking at here is two things. If we drag from the bottom, which is, you can see with my cursor, is about here. and we go up to the top, that is a 3,400% increase just to get to previous all-time highs for comp, okay? But let's not bet on only that. Let's figure out if we do go up and get a rejection, what are some of those levels? Well, from right here, going up to the first fib is a 281% bullish action. The next fib, golden pocket, is 736. The next fib, which is this main fib, is 1,851. So what you can do to see if this is something that you would, as a gem, go on DeFi Llama, go to Ethereum, go to Chains, go to Ethereum, go down to Compound, watch the TVL, what happened there. It's probably going to actually have a huge pullback because of the loss of belief in DeFi, but then go over to the transactions, look at the adoption rate, look at the wallet. You can Google adoption rate for Compound and see if there's an increase of users, see if there's an increase of fees, because it means there's more transactions. And then you can start, after you identify it's something you might want to look into, you can start mapping out some of the things, some of the likelihoods of where the targets are going to be so you can trade and invest safely. That's all I got for you today. We got to head over to the BitBoy Crypto channel for the news. If you're watching this on Hit Network, if you're not, also go check out Hit Network YouTube. We restream all these as well on there. So shout out to that community. Come check us out at BitLab Academy. All these socials down below. Again, my name is Kelly Kellum. I really appreciate all of you tuning in. I wish you nothing but success, but I ask you for patience and diligence to get there. With that being said, please like and subscribe, ting that bell. I'll see you in the next video. Have a wonderful day, everybody. Adios, muchachos. Thank you for watching. We're going to make some profits if you are diligent. We're going to make it.